Javier Milei came to power in Argentina a year ago and pledged to tackle chronic hyperinflation and overhaul the long-suffering economy. He has proven so successful that the upcoming Donald Trump government wants to replicate his approach on some matters. The government has posted rare consecutive monthly budget surpluses and inflation has fallen sharply with better than expected results, according to the International Monetary Fund. During a meeting with Milei at the Mar-a-Lago resort in Florida last month, Trump said Milei had done a fantastic job as president. Investors have also cheered the changes in Argentina. Its flagship Marvel Stock Index, which tracks around 24 of the country's most valuable listed companies, has soared almost 140% this year. Javier Milei has implemented a wide-ranging austerity program and its effects are becoming visible. Monthly inflation rates are declining, the exchange rate is stable, and the gap between official and parallel rates is at its lowest level in years. The risk premium on Argentine sovereign debt has also dropped significantly from around 2200 basis points to about 750 now. Despite a small group of MPs and a divided opposition, Milei has managed to assert himself in parliament and avoid a major economic crisis. However, the budget cuts have come at a cost to ordinary Argentines. The poverty rate has jumped above 50% from an already high level. The economy, the third largest in Latin America, has slid even deeper into recession, and unemployment is on the rise. The International Monetary Fund sees Argentina's gross domestic product shrinking by 3.5% this year, following a 1.6% contraction last year. The projected growth of 5% next year will, in simple terms, just about reverse those declines. Before I proceed, I encourage you to consider liking the video and don't forget to share your views on the topic in the comment section below. Your feedback is invaluable for us and a wider audience around the world. Investors remain cautious due to ongoing uncertainties. While monthly inflation is falling, annual inflation is still high at 118.8%. The slower pace of devaluation compared to inflation has kept the real exchange rate low, making Argentine goods expensive and hurting competitiveness. Low central bank reserves and persistent foreign currency drains from imports and tourism add to the challenges. The current exchange rate stability heavily relies on strict capital controls and foreign exchange restrictions, known as the cepo, a term for Argentina's currency controls. According to Professor Juan Carlucio, a professor in international trade at the University of Surrey, while maintaining these currency controls has been necessary, they constrain economic growth and discourage foreign investment. Multinational companies, for example, cannot repatriate dividends. Meaningful investment will likely follow the lifting of these restrictions, provided the broader economic and political situation stabilizes. Professor Juan added that much depends on Milei's ability to sustain progress, maintain alliances, and navigate the upcoming midterm elections in October 2025. If he approaches those elections with lower inflation, economic growth, and public support, he could solidify his position and inspire greater confidence among investors. If you look at inflation and the fiscal situation, that has been a huge and remarkable success, but the country is still in a recession, and it's actually in a deeper recession as a result of budget cuts. Milei, who likes to brandish a chainsaw to symbolize budget cuts, has slashed the number of government ministries to 8 from 18 and laid off more than 30,000 government employees so far. He has also scrapped energy and transport subsidies, halted virtually all public infrastructure projects, ended most subsidies to local governments, and frozen public sector wages and pensions. Many budget cuts were necessary to rein in a bloated, inefficient, and spendthrift state, despite the adjustment has proved painful in a country where roughly every 10th person is employed in the public sector. Yet, despite the harsh consequences of his policies, polling shows sustained public support for Milei. Slower price rises have been a welcome change for a population that has suffered hyperinflation for years. Month-on-month inflation eased to 2.7% in October from 25.5% when Milei took office last December. Compared with a year earlier, prices rose 193% in October, much less than the annual inflation rate of 211% recorded in December 2023. Before the Milei, the peso was losing value almost every hour, but now the peso is stable, which is good for the common people to buy things whenever they want without worrying about the value of the currency. Having shelved Milei's campaign pledge to dollarize the economy, it devalued the peso by 54% against the US dollar last December and then by another 2% each month since. However, the peso is still overvalued, which is eroding Argentina's external competitiveness. Alongside efforts to repair public finances, Milei has slashes red tape. Speaking on a podcast last month, he said his deregulation ministry eliminates between 1 and 5 regulations per day. He added that Elon Musk, and co-chair of Trump's new Department of Government Efficiency, which aims to cut wasteful expenditure and excess regulations, is a fan of his chainsaw approach to government bureaucracy and wants to copy the model over to the United States. That would align Musk with his co-chair Vivek Ramaswamy, who wrote last month on X a reasonable formula to fix the US government Milei-style cuts on steroids. Milei has also been working to attract more business investment, which is crucial to boosting economic growth. As much as 50 billion US dollars in foreign investment could flow into Argentina as a result of a new law that offers incentives to invest, including generous tax breaks, according to the Argentine government's estimates quoted by KNG Securities, a financial firm. But capital controls, which limit the flow of foreign currency into and out of the country, are giving investors pause. A blockbuster free trade agreement with the European Union reached between the bloc and Argentina, Brazil, Paraguay, Uruguay, and Bolivia could improve Argentina's relations with its neighbors and Europe, helping the economy. Recently, after completing his first year in office, Milei said his government would seek a free trade agreement with the US next year, and if that happens, then it will change the course for Argentina. At least for now, most Argentines seem willing to give Milei a chance, as more and more Argentines are realizing every day that his plans are working. Milei's government is on the right track. If they continue working as they are, Argentina will be unrecognizable within a few years compared with where it was just a year ago. Thank you for watching, and don't forget to subscribe to our channel for new videos on important international topics.